To Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Ryan McCormack, Factor and Core Equity Strategist over at Invesco, to discuss some fresh levels to watch on the Nasdaq-100. We'll take a weekly review on that, and of course, what happened with the 25 basis point rate hike out of the Fed. It's ninth since March 2022. March has certainly come in like a lion for us, hasn't it, Ryan? Let's take a look at weekly performance that we've seen over the past week with the Nasdaq-100.
Yeah, so we've seen this continuation of both QQQM, QQQ outperforming the broader S&P 500 and S&P 500 value index. In the middle of all this calamity, right? The no exposures to financials certainly has helped, but we've seen investors move into names like Alphabet, like Microsoft, having their best weeks in months, really based on almost like a flight to safety. We've seen this relative rotation trade back into these large growth names, and it's certainly helped the Nasdaq-100 not only this week, but year to date.
And it's interesting, Fed reaction days, especially when you get the rate hikes and the velocity that we've seen. I mean, 9 in a year is pretty quite substantial. And even if you take a look at the indexes now, they were up, actually the Nasdaq-100 up over 1%. Kind of when you walked in studio. Now we're about 1/4% down, so something must be coming out of the press conference or some kind of language that traders and investors are picking apart.
Yeah, either that or I just walked in here, which
at the right time.
Traditionally happens. Yeah, I mean, we've seen sort of like yo-yoing of the Treasury, both on the 2-year and the 10-year yields. Over the past week, we've seen up down as more news has come out on the banking side of things. Another rate hike. It looks like maybe one more for the year. There's been some changing of language in the Fed presser today. Rather than ongoing rate hikes, they're talking about firmness. So I think a lot of people extrapolated out maybe one more rate hike, and just substantial language around the health of the U.S. banking sector, which is obviously all new this meeting. So I think obviously Chairman Powell trying to calm investors and start to continue to shore up or speak about how well capitalized the banking system is.
And finally, let's take a look at sector performance over the past week.
Yeah, so sector performance clearly, favoring the growth names. You see tech, you see consumer discretionary. An interesting note you'll see in the chart there that within QQQ, financials exposure is showing up. That's based off of the GICS reclassification that took place last week. So PayPal and Fiserv are now considered financial companies through the eyes of GICS. Of course, Nasdaq and Nasdaq-100 uses industry classification benchmark, ICB, which does not look at those companies as financial. So why you're seeing the disparity there. But this continued rotation that we've seen in 2023 into the tech, the growth-oriented sectors, and Nasdaq-100 has widened its outperformance gap against the S&P year to date.
All right, appreciate the insight as always, Ryan. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.